Well, we think so. I mean, in the sense, we are starting to see equity market sentiment becoming a little bit more robust. EM currencies are doing slightly better in the last 1 week, but at the same time, our sense is that if the unemployment numbers in US continue to move lower, market concerns around an early tapering could potentially come back. But overall, we think that equity markets is where the sentiment is going to be the most robust in the next 3 to 6 months. Well, as far as the debt ceiling issue is concerned, I mean, there could be a little bit of complacency, but from a broader equity market perspective, I mean, the incoming indicators are still fairly robust. What we are seeing is that the UK GDP, for instance, was fairly strong yesterday. We do think that unemployment numbers in US are going to continue to move lower. US growth continues to tick along close to around 2% on average, and even in places like North Asia, we are starting to see activity numbers firming up. So it's broadly speaking, it's a fairly positive environment for the equity markets. Now, whether that spills over in the fixed income side is a little bit of a question mark at this point. I think that's quite correct in the sense US growth is going to be beneficial for the countries which are linked to the US manufacturing and consumption cycle. So countries like Korea, Mexico, Thailand, Malaysia are probably the ones which are going to be the first beneficiary. India too should benefit from this uptick in consumption, and we are already seeing that in the performance of some of the IT stocks. But overall, the tapering concerns that come along with stronger US growth will have negative implications for fixed income markets, not just in India, but also across the more vulnerable EMs. In case of India, we are expecting a slight uptick in growth numbers, but growth is probably going to remain close to around 4.5% in the last quarter. Our sense is that weak growth and relatively high inflation is going to remain the bigger macro challenge as far as the economy is concerned. The only silver lining at this particular juncture is the currency, where we are seeing a very rapid adjustment in the current account deficit, and on the back of it, financing of that deficit is not going to be a problem, at least in the next 6 to 12 months.